Thanks for clicking. A lot has changed in China's real estate crisis since we last looked at it in December. From China's real estate data showing accelerating declines in December despite massive stimulus, to China's opening its borders, marking the end of China's long-held zero-COVID policies, to Evergrande, yet again, reassuring its investors that it would indeed pay its debts.
We're diligent, dependable, honest.
But the real news is that Beijing is reconsidering its 3 red lines policy, a policy which very much started the real estate crisis to begin with. This comes as we're seeing economic data coming out of China showing real deflationary worries, as the negative economic effects of China's long-held zero-COVID policies are becoming increasingly clear. As such, Chinese President Xi Jinping is engaging in what the Financial Times is calling a reset, seemingly shifting to much more market-friendly policies than we've seen over the past year.
My midlife crisis problems will no longer intrude on you anymore.
Given that China's reopening and its ability to recover from its zero-COVID policies are set to have a major impact on the world economy, these are definitely interesting developments. So what I want to do today is go over China's decision to roll back some of its 3 red lines policies, take a look at the economic data coming out of China, discuss President Xi Jinping's reset, and then take a look at what to look for next. This is going to be the last of the regular China updates on this channel, as I want to narrow the channel to focus more on Canadian real estate, mortgages, finances, and Canada's economy. With that said, I will still be posting regular updates on China, just on a separate channel. Link in the description if you'd like to subscribe. With that said, if there's a China story that directly impacts Canada's economy, I will obviously post it on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these 3 red lines. China's 3 red lines policy, which was initially intended to strengthen its real estate sector by reducing the amount of debt held by its developers, very much caused a lot of the real estate problems, defaults, and downgrades that we've seen over the past year and a half. However, China appears set to be rolling back some of those 3 red lines policies, mainly increasing the borrowing caps and allowing its firms to add more debt onto their books. And some, probably quite rightly, are arguing that China is just kicking the can down the road, reinflating the property bubble. The immediate aim appears to be kick-starting economic growth in the wake of their zero-COVID policies.
Idiots.
The easing of the policies could potentially mark a major turning point in China's real estate crisis, at least for now, reinforcing a major shift on the part of Beijing to support the troubled market.
Because the 3 red lines were so symbolic of China's stance against the property sector, relaxing those measures would send a very strong signal to the market.
And the rationale for the relaxation of China's stringent debt policies become increasingly clear when we look at the state of China's economy. Indeed, a recent survey released this week showed that China is experiencing major disinflation, or a major slowdown in inflation, with price growth continuing to stall.
Must be nice.
Fair enough. Us here in the West, we have the opposite problem, with US inflation just coming in at 6.5%. But in China, they're looking to stimulate the economy, looking to get money into the economy, looking to increase leverage, increase debts, as a means of getting everybody back to work, as a means of restoring faith in the Chinese economy on the part of Chinese citizens. Given the amount of stimulus entering into the Chinese economy, and given Beijing's newfound refocus towards a more business-friendly environment, HSBC is predicting that China's economy should rebound very quickly by the second quarter with the new stimulus measures in place. And all of these moves are a real about-face, a real reset on the part of President Xi Jinping, who, as late as October of this year at the 20th Party Congress, had given very little indication that China would be removing its zero-COVID policies and provided even less assurance on the pace of China's economic development.
Never mind.
Indeed, since the 20th Party Congress, we've seen Beijing come to the rescue of the property sector, directing its banks to provide billions in funding, and then, as we just saw, a potential major reversal of the 3 red lines policy that started the real estate crisis to begin with. And we've also seen a major shift on the part of Xi Jinping to do with the economy, focusing much more on pro-business policies rather than the common prosperity that has characterized his leadership for the past few years. And these are major shifts coming out of Beijing. As we said, during the 20th Party Congress, it was common prosperity, zero COVID, very few measures for the real estate market, very few mentions of the real estate market, and now it looks like all that has changed. And as we've talked about before on this channel, China coming back to life could have a very real impact on the world economy. In the immediate term, it could cause more demand, which will cause oil prices to go up. In the long term, remains to be seen. With that said, I am going to continue to have updates out on China's real estate crisis, on its economy, just on that other channel. If you want to get those updates, please do subscribe to that channel. But for now, thanks so much for watching.